Welcome, everyone. While everybody's joining, we can already kick off. So my name is Nadine Bai. I'm the Academy Manager at A4S, and thank you so much for joining our webinar today. As you have noticed, we are recording this webinar today. So others will be able to review it. And it will be made available on the A4S YouTube channel afterwards, also just in case you want to get back to it at another point in time. These A4S Academy webinars are open to Academy and non-Academy participants. All are welcome. And as some of you might know, the A4S Academy is currently actually open for 2021 applications. The deadline is 14th of May, and the program is starting at the beginning of June. And I am aware that we think we have today quite a few of recently accepted participants for the new cohort. And we cannot wait to meet you in person in already 1 month's time, so soon. But for those of you who are actually not familiar with what the Academy is, you can actually find more information in the follow-up resource email, which we will send to each and every one of you after the webinar. It will also include details on how to apply if you have not done so already. But let's get started. So what will we cover today? We will provide you with an introduction to capital accounting. Then we will have a conversation with the City of Vancouver on their experience with capital accounting. Then we will have plenty of time for Q&A with you. And then we will provide you with a briefing for finance on sustainable development goals before we're going to wrap up. As usual, you can ask any questions you have freely in the chat function throughout the webinar, and we will address them then during the Q&A. So what are the learning objectives of this webinar for today? So after completing today's course, you will be able to recall the principles and steps to natural, social, and human capital accounting. You will be able to describe the SDGs, their relevance to business, and the actions that finance can take. And you will be able to translate the learnings of others from practical examples, namely the City of Vancouver, on measuring and valuing natural, social, and human capital to your work. We will be asking you questions about the content that we cover today throughout the webinar using Zoom polls. And you would actually need to complete these in order to get CPD or CPE points. So make sure that you are providing us with your responses. I'm very pleased to introduce today's guest speaker, who is Kim Buksa, Sustainable and Ethical Procurement Manager at the City of Vancouver. And Kim will share Vancouver's experience and learnings in implementing capital accounting with us later today. You will also be hearing from the A4S team, namely Helen Slinger, Executive Director, and Elizabeth Toe, Senior Manager for Sustainability and Accounting, and myself, who will be facilitating this webinar. So to find out a bit about you, we actually want to run a few poll questions now because we want to know who is in the audience today. So first, you would like to know, which department are you from? Are you from finance, sustainability, strategy, risk, or are you from a very different department? All right, the numbers are trickling in. Okay. Might not be a surprise, but the majority of you are from the finance, but we also have quite a few from the sustainability teams, a few from strategy and a few from risk, but also actually quite a few from others. So it would be actually quite interesting to know if you want to provide us with some further information on what different department you're from. All right. So secondly, we would like to know, to what extent does your organization understand the value of natural, social, and human capital to the business? What would you say? Fully, large extent, moderate, maybe not at all? Interesting, and it's really encouraging to see that actually 47% of you saying that to a large extent, you think your organization already understands the value of natural, social, and human capital. That is really great news. All right, now now it's of course interesting. So in your role, to what extent do you support the integration of natural, social, and human capital into accounting and decision making? And I'm very glad to see that for those of you who've joined today, you would say that in your role already, to a large extent, you support the integration of natural, social, and human capital into accounting and decision making. Again, that is really positive news. And is of course a great introduction to the insights on capital for accounting, which Elizabeth Toad, Senior Manager, will talk us through today.
Thank you, Nadine. So today's webinar is about measure what matters, capitals accounting. And what we mean by measure what matters is how can we measure social and environmental factors and incorporate them into our business decisions. What we see is that often an organization's strategy will incorporate various social and environmental factors, but the measurement and integration into day-to-day decisions can be challenging. So what we hope to do today is to introduce how this can be done and hopefully inspire you to find out more. So in a moment, you will hear from City of Vancouver on how they measure and integrate social value in their procurement decisions. But first, I will just spend a few minutes to introduce you to the A4S Essential Guides covering natural, social, and human capital accounting. The guides explain how broadening your accounting frameworks to collect, analyze, and report information on the various forms of capital can help to strengthen business decision-making. The guides also explore the benefits and some of the challenges of converting the impact of these capitals into financial figures. And we have also published a number of worked examples on members of our CFO Leadership Network to show you how companies have implemented capital accounting and the role of finance in making it happen. So in our guide, we suggest a simple three-step process that might be followed to integrate natural and social capitals into business decisions with a number of overarching principles to govern your approach. So you can see the diagram on the screen now, which illustrates the three steps and the principles. So let's start with step one, which is scope. So the question really to ask here is, how do I select my appraisal scope to focus on the most important areas and the relevant parts of my value chain? And under this step, there are three guiding principles. So the first one is about setting boundaries. So looking at your operations, your value chain, and also your geographic locations to set boundaries, and also attribute accountability, control, and influence. The second principle is around materiality. So identify the issues that may have a significant influence on your organization and your stakeholders. And we know that there are many environmental and social issues that could be relevant to any business decision. And it is not usually practical to cover everything. So, focus on what is most material to your business. And the third principle is completeness. So incorporate both positive and negative impacts and dependencies, and make sure that you understand the information needs of your internal decision makers and also your stakeholder groups as well. And the second step is measure and value. So the question we want to ask here is, how do I determine the basis of information and the method of collecting it and the values calculated? And there are two principles to consider under this step. The first one is measurement. So consider the most appropriate measurement timescale and also the data collection methods that you'll use. Try to be consistent with other valuations or reporting that are already undertaken across your organization. And again, think about the needs of the information users. In terms of valuation, this is about measuring your impact and dependencies on the different capitals, and really understanding the value to your organization as well as to society. So here you might want to consider moving beyond just measuring outputs to accounting for outcomes. which represent the value being created or destroyed. So for example, if your company has staff training programs, the input might be the time and resources used. The output might be the number of people attending the training, and then the outcome is the value derived from the attendees and then by your organization and society. And you might also want to consider whether you want a qualitative, quantitative, or monetary valuation, or maybe a combination of all three. If you are calculating monetary values, you might want to consider whether you want to look at the shareholder value or societal value or both. And the third step in the process is evaluate and apply. So here we want to ask, how do I evaluate the results and apply the findings? And the two principles to consider here are confidence. So capital accounting, it is evolving and becoming more robust. So it's important that the assumptions that you make, the valuation techniques and methods used are clearly stated. And the data should be robust, comparable, and reliable, so that your decision makers within your organization can rely on it to make decisions. And also, make sure that the data can be subjected to internal or external quality checks and verification. And be transparent about gaps and uncertainties, and also ensure that both the positive and negative impacts and dependencies are captured. This will really help enhance confidence in the data and decision making. And the last principle, application, this is about applying the findings across your organization. So this may be at the corporate level or in your operating division and product development to really help drive business decisions that create environmental and social value. So I really want to spend a bit of time now to look at value creation. Some of you may be familiar with the International Integrated Reporting Framework. So one of the fundamental concepts that underpin the guidance in that framework is value creation for the organization and for its stakeholders and society at large. And what you can see on the screen now is a diagram that is taken from the Integrated Reporting Framework to illustrate the value creation process. As you can see, value is not created by or within an organization alone. It is influenced by the external environment, created through relationships with your stakeholders, and also dependent on various resources. But at the core of the organization, as you can see in the middle of the diagram, is its business model, which draws on various capitals as inputs, and through its business activities, converts them to outputs. So that could be products, services, byproducts, and waste. And the organization's activities and its outputs will lead to outcomes in terms of effects on the different capitals. You can see on the diagram that there are different components such as external environment, the governance structure, and the strategy of the organization, which are all important components to the value creation process. We won't go into the detail now, but I think the key takeaway here is that all organizations depend on various forms of capital for their success, and the value creation or erosion process is not static. And organizations would need information to understand the dependencies on the capitals and also their impact, both positive and negative, on the different capitals. So that was a quick introduction to the steps and principles for capitals accounting, and also the role of the capitals in the value creation process. What I'll do now is to just run a quick poll to wrap up this part. Let me just bring that up. So what is the order of steps to follow for integrating natural and social capitals in decision making? So I went through that just now, which you can also find in our essential guide to capital accounting. Thank you. Yep. So the fourth one is correct. The steps should be to look at your scope, then measure and value, and then evaluate and apply. So thank you very much for taking part in that. I will now pass the time over to Helen.
Thank you, Elizabeth. I would like to welcome again Kim Buksa from the City of Vancouver, who has kindly agreed to share her experiences with us today. As the name suggests, the City of Vancouver is a municipal government organisation in Vancouver, in Canada. And in 2019, it developed and implemented a social value procurement framework as a way to generate positive social outcomes. The framework encourages the City of Vancouver staff to procure services from vendors that have a social purpose or that are diverse. The city's target is to procure 50% of services from such organisations in specific procurement categories by 2023. The project of generating social value through procurement was actually a finalist of the Innovative Project category in our Finance for the Future Awards a couple of years ago. And I believe we will be sharing some further information about those awards with you in our follow-up communication. So as mentioned previously, if you have any questions, please do feel free to add those into the chat as we go. So welcome, Kim. Thank you.
Thank you.
My first question is just a little bit about the background of this framework. You know, what were the key drivers behind the implementation of your social value procurement framework?
Yeah, well, interestingly, it's very much what Elizabeth was talking about. So it actually goes back as far as 2010 when we had the Olympics here. And that was really a key component of deciding on the social piece, recognizing that other jurisdictions with similar large events had reached out to their communities and had made sure that community organizations were participating in the benefits of those large scale events. And primarily it was nonprofit businesses, or from the third sector, for those of you that are in the UK, charitable businesses. And so that was really one of the key drivers here in Vancouver, was to add that into the procurement process and to have community benefits realized within the procurement. But it was never further defined than putting it into the procurement process. And many people thought it was going to be social enterprise only, nonprofit business only. And so the key there was that it was identifying vulnerable populations in the city of Vancouver. And so it was added into a strategy more recently, about 5 years later, into our Healthy Cities strategy to develop living wage and social procurement into our procurement policies.
Fantastic, thank you. And obviously this isn't something that the procurement team could do by themselves. Indeed, I understand that you guys report into the CFO. It's part of her portfolio. Can you give us an overview of the role that she played and indeed her finance team in developing and implementing this framework, how you worked with them to do so?
Yeah, it was an interesting process because it was actually initiated through another department. So it was through our social planning community development department, and they sort of pushed it or put it onto our CFO and procurement, which I think was a smart strategy to start getting kind of universal buy-in and engagement from the entire organization. And thankfully, our CFO, Patrice, was extremely supportive. She's always been supportive of sustainability. She's been a member of your organization for quite some time. And so she has always recognized the investment into the community, both environmentally and socially. But it's a funny space, right? A lot of people don't know what social procurement is. And so while it sat on that in the policy, it really needed somebody to kind of come in and define it. And so that was really what brought me into the space. I come from the social economy, one of a few that come from the social economy more and more these days. And it was really working with Patrice and her finance team to define what that social procurement could and should look like, and really diving into the analysis and the data that existed in the city. So rather than starting, as many organizations do, of just saying, oh, well, let's do social procurement and we'll say 10%, and we don't know what we're actually doing already. And I really knew that that wasn't going to fly, and that we really needed to look at the data. And that's for a couple of reasons: to mitigate and dispel any existing myths that it's risky to do social procurement, that it costs more, that the vendors can't do the work, And so it was really that data that was needed to show that we're already doing it in some capacity and what those capacities look like.
Great, thank you. And maybe you could tell us a little bit about the details of how it works then. What is the framework? How does it work?
Yeah, so the framework really got very broad. It's a very big framework, and the purpose of that was that it would be a foundational framework that would stand the test of time. You can appreciate as leadership changes and our councils change, priorities shift. So we didn't want to be reinventing a policy every time or prioritizing a certain population over another one. So we started very big. We're very big. So social procurement for us was really getting into supplier diversity, which I think is a much more universal term that people are familiar with. Like I said, when you hear social procurement, it sort of sounds like a nebulous, whereas supplier diversity is something that Fortune 500s are familiar with. Everyone around the world's been doing some version of supplier diversity for some time. So we really took hold of that, recognizing that Vancouver, of course, has a very diverse community. Obviously, we're embedded in an Indigenous land with 3 nations. And so it was really key to make sure that we weren't targeting one population over another. So we made sure our procurement is inclusive and equally accessible, but we're prioritizing certain populations, and that's kind of the equity piece. I think the new component for social procurement, supplier diversity, that really is tangible, and I saw somebody asking about the capitals, and this is what I would say are the capitals, is the employment equity piece. And so that's really encouraging moving beyond labor standards and health and safety of staff, which I think is kind of a 2010 ethical procurement piece. Which obviously is still relevant today, but kind of evolving it to make sure that we're not just doing the bare minimum of what's expected, that we're making intentful decisions about equitable participation of the community in our procurement and in vendors' workforces. Compensation, I mentioned living wage. So living wage and fair wages are a key component. Not so much an issue in Vancouver because we have a very robust vendor list and workforce that we're actually at a minimum unemployment rate. So there's high competition, which forces wages up, but it's also about employee development. And again, looking at workforce diversity. So wanting to make sure and send the message to our vendors that their population, their workforce needs to represent the community, and that they need to be taking steps to make sure they're included in the workforce. So that means measuring, obviously, and then sourcing when possible. And really making sure, again, that, like you mentioned, that the measurement matters, that they need to know who's in their workforce in order to figure out if it represents the community the way it should.
Fantastic, thank you. And I guess, you've got this framework here and you have a very clear idea, I'm sure, about, what you want to achieve with this framework. So maybe you could tell me a little bit about the metrics and the targets that sit alongside this, and how you get the data that you need
right. Yeah, so again, similar to what was mentioned, and I really appreciate seeing that slide with the circular. I always say that social procurement really is the circular economy on the social side, right? So when you hear circularity or social economy on the environmental side, we sort of know what we're talking about. But social procurement is really those dollars recycling over and over and over again within our communities, right? So keeping the dollars here and seeing that growth and value in the community. And so we started asking the questions just to warm up our marketplace to the idea of sharing this information and starting to think about it. And so we asked questions on all of these components. That started, I'd say, even before 2019. I started having the questions go out in our documents to see what we would hear back from our vendors, if it would, kind of cause any ruffled feathers, which of course it did. And you need that, right? You need that to open up the conversation. So, and now we measure this. So I go through all of our procurements. I look at all of our submissions and see how they've answered these questions. We don't necessarily weight or point on every question, on every procurement. It's definitely targeted, as was mentioned. We do really focus on service categories where we know that there's an opportunity primarily for the employment equity piece. And so I measure how many Indigenous businesses are participating. I measure how many social enterprises are participating. I look at women-owned businesses. And we also capture their workforce data. And so the data has actually proved what the research was already telling us, is that social diverse businesses are more social diverse, equitable to their workforce, right? And I think that that's a key piece, because we heard that a lot, like, so what? So what if we're hiring or doing business with women-owned businesses? Like, what is the outcome there? And we can see it now. We can see that they do, in fact, have more diverse workforces and are more equitable and are better for the community.
Fantastic. So I can see that you are putting these social factors right at the heart of how you make your procurement decisions. Do you actually put a value on what you're in your measurement? Do you actually monetize it, or do you value it in some other way?
We do, yeah. So we do on certain procurements where it's identified that there is a more significant opportunity. Our staff tend to default to a 5% weighting, and that's good and bad. I would not say their default is to ask. So we've mandated asking. We've not mandated a weighting, and the reason for that is that it happened in the past. And it's kind of a double-edged sword, where you're focusing on procurements with 5% where it's totally not relevant, and then where it's supremely relevant and you could be weighting significantly to get the outputs and outcomes that you want, it's only that 5%. So we've tried to steer away from having a mandated amount percentage. So we've seen anything from 0 and asking, which just is basically us doing our research to find out what our vendors respond. And asking, even without waiting, allows us to put it into the contract, right? To have those conversations with the vendors and still put something in the contract. And then where we think there's an opportunity, as I say, to push a little bit, we put the weighting in, and that we've seen that from 5 to 25%. And I think you're probably familiar that like cities like Manchester are doing 20% mandated. So there's definitely an opportunity there. And certainly for the private sector, there's an even larger significant opportunity. So we do, and all those questions are asked. There are 5 points, typically 5 points each. There's about 10 questions in our social value questionnaire. And like I said, the weighting goes anywhere from 5 to 25+% into the decision making. And that really is the conversation with the business units and those that are buying and myself to recognize if there are players in the market and how can we achieve that outcome to get them participating in the process and also being rewarded and awarded the contract at the end.
Fantastic. We always like a little bit of push.
Yeah.
So that's great to hear. So I'm going to give you a break just for a moment, Kim, and I'm going to come to our audience and ask a quick poll question. James, if you could get that up on our screens. So the question is, what are the key drivers for implementing capital accounting at the City of Vancouver? We're just checking whether you were all listening carefully to what Kim has just shared. Fantastic. Well, the answers are actually all correct. So it looks like you heard most of them in what Kim said. I believe she said them all. So fantastic. Thank you. So coming back to you then, Kim, in terms of, the framework and everything that you've done so far and looking ahead, you mentioned that there was, maybe I mentioned that there was a 2023 target in relation to the framework. It would be good to get a sense of, was that target the right target? Are you making good progress towards it? And how's the outlook?
Yeah, it's an interesting target, and it wasn't embedded in data, I would say, except that it came out of again the head of our community services, our social services department, and Patrice and myself, obviously being women, and recognizing that for sure City of Vancouver has 50% of the population as women. And so that was really one of the key drivers, actually, was just simply knowing that stat, right, of the demographics. Obviously, there's a lot of information that does back it. We know that there's tens of thousands of women-owned businesses, both in the City of Vancouver and within our province, and also people of color, right? So, of course, being on a coastal side of the continent, we have a lot of people of color and immigrants. And so that as well, we're up to almost 50% of the population representing people of color. And so that is really where it came from. And the reason that it was focused on contract award rather than spend is our technology is a little behind. In that our spend data doesn't really represent the picture, right? So there's a lot of things that we say are spend that is actually cash flow, right? So it's not necessarily, it could be grants, it could be levies and fees. And so we've really focused on, again, what we control and what we could measure, which are contracts coming out and how much those contracts are awarded for. So it's 50% of the number of contracts as well as the awarded value of those contracts. And again, that was a conscious decision that we went around the table a couple of times, because of course you could hit a large number of contracts that are very small value. And then we would hear, of course, from the community, that's still not fair or equitable. And you could also have it the other way around, right? You could hit one large contract that served a community organization. And again, nobody else got a piece of the pie. So that's why we did both. And a lot of it is the data, right? Of me going through those proponents, seeing if they answered. Even if they didn't answer, then I vet it, try and vet that information online or however I can source that information. And so we're actually moving really well. It's definitely an ambitious target. And for 2020, shockingly, we moved the dial. So we did get up to about 30% in both of those categories. We were in the 20s in 2019. So that is sort of surprising, I would say, for 2020. But also when you think of what was happening in 2020, there was definitely an amplification to support small, social, right, local, diverse businesses. And so I do think that that probably helped move the dial. Now to move the dial, we're getting into really more intentful. So again, going back to that pushing of making sure it's more than the 5% on contracts where it makes sense, and making sure those small contracts, as you saw on that slide, under 75, there's a lot of opportunity because we don't have to go public. So under 75, if we're only going to go to 3 organizations, why aren't those 3 organizations only social and diverse, right? Then we know it's going to be awarded to a social diverse organization. And we do a lot of those under 75. So that's a key space for us to play and move the dial. So those are the 2 focuses right now, are to be intentful on the larger procurements, and really move the dial on those smaller under 75,000 procurements. Where we know that's typically where social diverse businesses play. And then the other piece that we need to start measuring is, even if they don't fit those categories in the pushing up front of being awarded the contract, that we're pulling something out of them through the contract. And that will be the next measurement that gets added into the target.
Great. So you've talked a little bit there about some of the metrics that you've achieved. I guess the reason that you go about doing this in the first instance, though, is because you want to be able to create positive social outcomes. So actually, are you able to see any of those yet? Are you able to recognize those outcomes as being from this procurement process, and indeed be able to measure any of them?
Yeah. I mean, as you know, impacts and outcomes are tricky to measure, right? So I think speaking to the workforce diversity and their sourcing and their wages, I think is a key piece. I don't think we're going to see a lot of the impacts and outcomes, understandably, for years, right? It really, truly is, as you folks say, investing in the future, accounting for the future. That social outcomes and returns are not going to show up for years. We're not going to know if employing that single mom of 2 kids, how it affected their kids until they're older, right? So it really is a prevention strategy, which is hard to measure. What we do know, and we do reach into some of our procurements and ask them for those details, especially social enterprise nonprofit businesses. And one more recently that was in there with the examples was to a restoration company that had no social procurement, supplier diversity within their organization. And that was forced upon them as part of our contract. And they've embraced it and taken it to heart, that they're now working with multiple social enterprises, not just on the City of Vancouver contract, but across their operations across Western Canada. And they've formalized diversity and inclusion programs and policies into their own workforce and operations. And so that is really what our goal is to have more of that happen, and getting those stories and those values and outcomes out of the vendors. And so as I hopefully start, I'm a team of one in my organization. And so it's, the storytelling is always, right, it's always kind of the last thing to be done. And so that's really where we look to our intermediaries to hear from, who are representing those diverse populations and organizations, to speak to how they were impacted by the work, by the support, by the wages.
Fantastic. And just to remind our audience, if you've got any questions for Kim, please do put them in the chat. I think I'm going to ask one more question and then come to any questions that you have asked. So Kim, obviously we focus a lot on social outcomes and the framework around social outcomes. What about the environment, and how does this framework interplay with, I guess, the environment and the green procurement that you have in place at City of Vancouver?
Yeah, so my portfolio is sustainable, including both social and environmental. The social was the focus when I came in just 3 years ago. I'm just over 3 years to catch up to the environment. But it was noted very early on that the environment also needed a significant catching up to current day. We had extreme success in obviously buying green products, more environmentally friendly products, but it hadn't caught up to kind of some of the other things like GHG or Scope 3. Or Tier 3, as you call it, in terms of emissions, and again, what our vendors are actually doing. So they might be selling green, environmentally friendly products, but they might have the worst record for their workforce diversity or their own sustainability operations, waste management, that sort of thing. So my goal coming in is really not, all of it is really about making sure the vendors are performing better, right? My mantra, and you will see me if you ever follow me on LinkedIn, is buy better, right? That we can always be better, buy better, do better. Once you know better, you got to be better, right? So the push really is to make sure our vendors, again, are familiar with the climate emergency, are recognizing their role in that and what responsibilities they're taking within their operations to move the dial there. And so we ask those questions as well. So again, we have sustainability questions that are both social and environmental that go out on all of our public procurements, asking the proponents to think about how are they tracking and reporting any of kind of the, like you said, the SDGs that are appropriate, right? GHG, water, toxins. And that comes a lot from us, obviously, trying to be the greenest city in the world. If you've, again, heard City of Vancouver's branding, that we expect a lot of our community and our residents. And so obviously we need to make sure that we're also walking that talk, right? And so we're trying to be better and have those same expectations of our community and our vendors. So we do ask those questions. And of course, life cycle, circularity, latest and greatest. So those questions are constantly evolving. And I'm also tracking those to see if the vendors are responding and what those responses are.
Fantastic, thank you. So again, I'm going to give you a short break, Kim, as any more questions might come in from our audience. There's actually 2 come in already. I think they're probably more for me than from you, so I might just touch on those very quickly, and then a poll question just to give everyone a chance to ask any more questions directly from you. So we have a question from Fiona. This is saying, can we give examples of capitals? So when we're talking about the capitals, Fiona, we're referring back to the diagram that Elizabeth showed early on, where it shows not just financial capital, but it also shows social, human, natural, manufactured, and intellectual capital. Essentially, those things that the organization relies on, but they don't necessarily appear on your balance sheet as a financial asset would. And Natalie, love your question here, Natalie, that you're familiar with the Natural Capital Protocol and the Social and Human Capital Protocol. I should hope so, given I know what your role is. How is the approach that you've introduced aligned? Well, as you may or may not be aware, our guidance around natural, social and human capital actually predates the protocols. We were involved in supporting the development of the protocols as well because of the work that we had done. And we are currently in the process of updating all our guidance to maintain, obviously, the guidance that we have in there specific to accountants, but also to bring into play the structural, the structure of the protocols to make sure that the two talk to each other much more closely. So hopefully that answers that question. So coming to everybody for polls, if you do have any questions for Kim, just to remind you to get those in. Poll question, thank you, James. In what ways can finance teams add value to capital accounting? Something that Kim touched on earlier. And also Elizabeth mentioned as well. So please do reveal the answers. Again, fantastic. Yes, these were all different ways that finance teams can add value to capital accounting. So well done, everybody who got those right. So Kim, we do have a question here for you from Ben. Has there been much resistance from vendors in pushing the dial on the environmental and social practices, or has alignment generally been good?
Yeah, I mean, you can appreciate why some vendors are pushing back on my pushing. So we did hear, we did ruffle feathers, like I said, with some of our vendors that were the go-to. And like I said, you can appreciate why they're probably pushing back. They did not fit into any of that broad scope of the value framework. And so we do hear from those vendors occasionally. There hasn't been a lot, I would say. It's a very small group that have pushed back and said, this information isn't relevant to me doing the job. The workforce diversity specifically comes up quite a bit, feeling that it's compromising staff's privacy, which I can assure you it's not. We've, of course, vetted through our legal, especially if you have a team of more than 100 people, there's no way, I'm not asking for names. And the goal really there is not for me to know the information, but for me to want you to know the information. So there has been a little bit of pushback, and there's a couple repeat offenders, I would say, that just know that they're getting those contracts, even when it's weighted at 5 and 10%, they do not answer the questions. They know they do not need or want those points. And those, no surprise, are on my hit list, right? So those, as we develop a vendor scorecard, which is really more a commitment card, is to target those vendors that we're repeatedly doing business with and are repeatedly awarding contracts to, who refuse, which gets me fired up, refuse to answer those questions. And I suspect I'm giving them the benefit of the doubt that the person answering the contract bid or the bid is not the person that knows those answers or those questions and answers. So that is my hope. But then those are the questions that we need to be following up with in our negotiations and as we go through the contract. And so that's the next piece. Like I said, is if you're going to refuse, then we're going to have a little bit of a conversation and go from there. But it's been very small. Like I said, it's we asked on 73 procurements last year, which is almost all of our public procurements, and we had almost 400 responses, and almost all of those responses at least acknowledge the question, and hundreds of them fit into those categories of social, diverse, or equitable. So it's a very good, it's like I said, the argument for asking the questions is definitely there, that vendors are not afraid of them. This is the sign of the times. Like, we are, for a city, I would say we're ahead in terms of being a city asking these questions, but we're behind in terms of corporate America, corporate Canada asking the questions.
So it sounds like those repeat offenders need a little bit of push, increasing that weighting. Fantastic. So one final question from me before I pass back to Elizabeth. So if anyone listening is thinking about doing something similar, some sort of social value framework or natural capital value framework, how would you advise them to start? What should they do? Yeah, it was really touched on again in those early slides, is really looking at what are you buying the most? Where is your biggest spend, I would say?
and who are you buying the most from? So I think it's those two pieces. And I suspect the most from are going to be smaller contracts, which, like I said, is a key piece in moving the dial. Smaller contracts can go to those social, diverse small businesses. And then looking at the overall big spend. So again, like, is there what's the materiality? Where are you spending the most? And how can you meet those folks, those vendors that are in those high spend categories, meet them where they are, which is a key piece, again, with setting specifics of goals, right? You can't expect everyone to be reporting out on GHG if nobody's tracking it. So meeting them where they are in those high spend categories and having the conversation or trying to move the dial with them. So I think it's those two pieces, and then the middle will kind of fill itself in based on those two pieces.
Fantastic. Well, thank you very much, Kim. Really appreciate you taking the time to come and talk to us today. And Elizabeth, perhaps you can just take us through the next section. Thank you very much.
My pleasure.
Thank you, Helen, and thank you, Kim. So what I'd like to do now is to give you a quick overview of a paper that A4S published recently, which is Briefing for Finance on Sustainable Development Goals, the SDGs. The paper gives finance professionals the essential background information on the SDGs, actions that they can take, and also links to resources and further guidance. Hopefully it will help you to start thinking about how finance can contribute to achieving the goals, if you're not already doing so. And we'll also take a look at how the SDGs can be aligned to the value creation process, which we looked at earlier. So I'm sure many of you are already familiar with the SDGs. They are a comprehensive set of 17 goals created by the United Nations. And the goals are aimed at solving the world's most pressing challenges, such as climate change, hunger, and access to healthcare and education. And the achievement of the goals is critical to creating long-term value, both for businesses and the society. And the UN has declared that 2020 to 2030 is the decade of action to deliver the SDGs, to spark greater urgency and ambition, and to accelerate action and delivery of solutions. And the private sector is really a critical partner to deliver the goals, and many companies are already engaging with the SDGs. A recent research by PwC showed that 72% of companies mentioned the SDGs in their reporting, 51% in their annual report, and 25% in their published business strategy. So if we look at the diagram that we showed earlier, the role that businesses play across society is, they are facing increasing scrutiny and expectation levels, and we are seeing companies widening their corporate purpose to a broader societal role and considering value creation and erosion across the multiple capitals, as you can see on the diagram. So looking at natural, social, human, financial, intellectual, and manufactured capital. And the achievement of the SDGs is critical to creating long-term value for business and society. And we can see in this next diagram on the screen how the SDGs can be aligned with the value creation process. So this diagram is taken from the Sustainable Development Goals Disclosure Recommendations, a report that was published by a number of accounting bodies, professional bodies, the International Integrated Reporting Council and World Benchmarking Alliance. And we can see that long-term value creation for the organization and society is a fundamental concept of SDG disclosure. So we will share a link to the report in the follow-up email after this webinar. So take a look if you want to find out more about recommendations for effective and standardized corporate reporting on SDGs. So let's take a quick look at what are some of the key areas where finance can help to align corporate strategy and metrics to reflect the SDGs. So in the next slide, yeah, you can see on the screen now, there are 5 key areas as recommended in the A4S briefing paper. So first of all, identify the SDGs that are most relevant to your organization. If you're in finance, maybe connect with your sustainability team to decide where key risks and opportunities lie and assess the actual or potential impacts on achievement of the goals. And then integrate your findings into the organization. So include the goals in your core strategy, governance, financial planning, and reporting. And then setting ambitious targets. So support your organization to contribute to the SDGs from across all functions and try to operationalize the targets. And then, if you're in finance, incorporate the SDGs into financial decision making. So, including the goals in your capex appraisals, budgeting, and performance management, investment cases, and financing. And then finally, also communicate progress on areas of the SDGs in your corporate reports. So report on your organization's performance and progress across all key areas regularly and transparently. And also avoid cherry picking information that only shows the favorable impacts. So in the briefing paper, we have also given some examples of actions that businesses have taken to progress towards the goals, and also further resources. So do take a look in your own time, and also find out what your organization is already doing on the SDGs, and think about how your role in finance can support decision making in this area. So just to close out this part, I'm going to run a poll question, but perhaps you can stop sharing the slide, otherwise you can see all the answers. Okay. So what actions can finance take to support the achievement of the SDGs? Thank you. So all of them are correct, except the third one. As I mentioned earlier, there are a lot of environmental and social factors that affect your business decision making. So it's not usually practical to include all environmental risks, but I think look at the ones that are material to your business and start integrating the material environmental risk into your corporate strategy. But also look at your social risk as well, and as well as opportunities. So, but otherwise, the rest are also actions that finance can take to support the achievements of the SDGs. So thank you very much for taking part in that, and I will pass over to Nadine for wrapping up.
Thank you so much, Elizabeth. Well, Kim, probably really like to thank you for sharing the insights today on Vancouver's experience and your framework. That was really interesting. I'm sure I'm not the only one who took plenty of notes. But also thank you so much, Elizabeth and Helen, for talking us through the world of capital accounting today. As was mentioned previously, after today's session, you will receive a follow-up email, which contains many additional useful resources to read, watch, and learn about capital accounting and about Vancouver's learnings. And but as you also might know, all the knowledge in the world does not change anything if it's not translated into action. And as we just heard, now is the decade of action. So we would really like to know from you now, how do you personally intend to translate what you've learned today to your work in the next 6 months? Well, this is really great to see. And I'm really sure that all the resources that we will share with you afterwards would really help you, for example, with considering what your organization can do to measure your natural, social, and human capital, and how you in finance can support this. As mentioned earlier, this webinar that we held today on measuring what matters is part of the Academy program, which is currently open for applications. And for those of you who are really interested in learning more and participating in it, as we said, there will be more information in the follow-up email. And we are running similar webinars every month around various topics. The next ones will be looking at debt finance and CapEx. So if you would also like to take a deep dive into these areas, please sign up for it as soon as you receive the email. And obviously, because we're running these webinars, we would really like to have your feedback on how you experience it. So before you sign up, we would really appreciate it if you can provide us with quick feedback. If you found today was really helpful, I certainly found it. If you found that you got some useful information, I certainly did. And as I said, we really hope we're going to see you at the next sessions. And thank you again, Kim, for taking us through your learnings today. That was really insightful.